Hello everybody, hello everybody, hello everybody. We are live on YouTube, live trading session with Isaac Izy. So make sure that you join, do not miss out. Hi everybody. Testing sound, testing sound. Can everybody hear me? Can everybody see me? Can everybody hear me? Hi everybody. Oh, there we go. There we go. There we go. Live chat. It's on. It's on. It's on. Testing sound, testing. Hi everybody, welcome. Welcome everybody. Randall Janssens, yes sir, what it do? How you doing today? Musa Matlobo, hi Musa, what's going on? Is everybody alright? Let's wait for other people to come in. So we can begin with today's business. We can get... How you guys like my gear? How you guys like my OctaFX gear? How you guys like my gear? Hi everybody, welcome you guys all to today's live trading session with Isaac Izy. If you can hear me, please make sure that you comment in the chat box and tell me where you are tuning in from. Tell us how long you've been trading. Tell us where are you from. Are you from South Africa? If you are from South Africa, which town are you from? If you're outside of South Africa, let us know where you're tuning in from, the country and the city where you're representing. All right. So welcome again to today's live trading session. All right, it's our first one for this month, live trading session. Today we're gonna have another one next week, Monday at the same time, 7 p.m. Central African time. It's gonna be massive. It's gonna be power packed. Next week I will be teaching more in-depth, more advanced strategies, more advanced concepts, so you guys can grasp, right, how we catch those sniper entries. If you guys can hear me, make sure that you comment with the fire emojis. If you can hear me, fire emojis in the comment section. Fire emojis, make sure that you put those fire emojis. Let's keep it going. All right. We have Khaled Hababuse all the way from Pretoria, Pitori Matlanyeni. What it do? All the way from Pretoria. Shout out. Great to have you here, man. Great to have you. So as we are proceeding, I would just like to give a disclaimer that any opinion, any news research, any prices analysis or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. All right, so please take note of that we are, whatever that we speak on the seminar does not constitute as investment advice. It's just mainly general market commentary. All right, if you are looking for any investment advice, please make sure that you speak to a regulated entity or regulated key individual that is regulated with the FSCA or whatever financial governing body in your country. All right, so yes, um, if you do any need any financial advice, any investment advice, please make sure that you speak to such key individuals. As for us, we just do general market commentary. All right, and again, as it is a norm with us and OctaFX, we will be giving you, our viewers, 100% deposit bonus. All right, after attending these lessons, you must use the promo code that I will give you at the end of this session to get your 100% trading bonus. All right, so yes, you will get 100% bonus on your account. You just use the promo code that I will give you at the end of this session to claim your bonus, to activate it. All right, and after that you will also get a guidebook of this of this session in your email address after you have attended. All right, so do let me know where you're tuning in from. Do let me know. I see there's about 17 people, so make sure that you let us know where you're tuning in from, so we can know who exactly we chatting to tonight and exactly where you're from. I only see someone from Pretoria. Nobody has said where they come from. Please make sure that you tell me where you're coming from before we can proceed, before we can proceed. And for those that are joining us for the first time today, that have never been with us on this lovely super power packed webinars, my name is Isaac Izy, and I'm originally from South Africa. I'm a professional financial market analyst, I'm a professional trader, and I'm also an expert in trading psychology. All right, I have over, or just above 10 years of trading experience. All right, I am the founder of the academy called Flexi Forex College, and we have trained over 5,000 students throughout South Africa and other neighboring African countries and globally. All right, and we have held over 300 forex seminars throughout the southern African region. I'm talking Botswana, Mozambique, Namibia, all these other neighboring countries. We've held over 300 forex seminars and counting. Hopefully we will be seeing you in our other upcoming seminars, all right, with OctaFX. All right, my passion as an individual, if you don't know me, is to provide new traders with proven strategies and empower them not just with the skill for trading but with psychological tips, and also empower them with life coaching so they can become the best versions of themselves and they can succeed in whatever that they're doing, and in this context in forex trading. All right, I see Siviwe all the way from Germiston. What it do. My older brother stays in Germiston, so shout out. I will see you the next time I am in Germiston. Soli Mopa all the way from Fosloras, all the way from Foslo. Shout out Soli. My best friend in college, his name is Soli, from primary school, high school, all the way to college. That's my brother. We used to call ourselves twins. His name is Soli as well. So shout out all the way from Foslo. I do have friends in Fosloras. So yeah, man, next time I'm that side, let's link up. Let's see where is everybody else tuning in from. All right. Let's get to the business of the day, guys. Let us engage. It's important that we engage, and it's not just a one-sided affair. When I talk, ask questions. All right, please make sure that you ask questions, and so I can be able to so I can be able to assist you, know where you are struggling. You get what I'm saying? So please make sure that Oh, just 1 second, guys. I just need to put my phone on DND so we don't get disturbed with calls and any, Randall Jansen all the way from Cape Town, all the way from Kapstad, Look, man, I want to be coming to Cape Town. So next time you're hosting a seminar, Randall, please make sure that you are there and invite more friends. Guys, let me just also give you this opportunity because this is something that we charge for. If you know, we charge a lot of money for such sessions, but today you're getting it absolutely for free, courtesy of OctaFX. So I'm going to give you guys 2 minutes to share the link of this webinar with your friends and your families or your fellow colleagues in trading so they can come and learn how to get those sniper entries. So today I'll be giving you my secrets, all right? My secrets, proven secrets to those sniper entries, sniper entries. Today I'm going to show you why they call me Agent 45. I'm a sniper in the market, all right? Sheila Madumo all the way from Centurion. Sheila, welcome all the way from Centurion. Where in Centurion are you from? Where in Centurion? All right, yes, Pretoria Centurion. So yes, guys, I'm gonna give you a minute. Just speak to your friends, share this link with your friends. All right, and then let's get started. So yeah, man, today, as I said, we're gonna be trading live. We're gonna be seeing some opportunities in the market. If there are any opportunities, we're gonna be taking them. All right, but before we get to that, I think it's important that I teach you guys on what to look out for when you get to the charts, so next time you're trading by yourself, you also know what to do and you just don't wait for us. You get what I'm saying? Musa all the way from Foslo. I see there are 2 people from Foslo. I hope you guys are together wherever you are. If you're not together, you don't know each other, make sure that you guys link up so we can build a trading community in the Fosloras region. All right, you get what I'm saying? So yes, so today I want us to take a look at the content of today's workshop. Okay, my goal is to give you instructions on how to start trading. That's why the workshop will be with examples and practical actions. In this case, I will explain to you types of markets and why Forex is more profitable and interesting for trading. All right, then we will learn who a broker is and I will show you the procedures, all right, of how to get started in trading. Right. All right. Just give me 1 second, and then yeah, just 1 second. I just need to open one of my presentations here real quick, and then I will be with you guys shortly. I do apologize for that. All right, it appears I have opened a presentation of another webinar, upcoming one. Almost gave you guys the secret of the next. Ooh. All right. No, man. I do apologize. Please do forgive me for that. Let me do this. All right. Please do forgive me for that. So we don't. There we go. It appears that I almost gave you guys the secrets of next week this week. So let us make sure that we all right. Let's quickly go there. I do my sincere apologies for that. All right, while we're still waiting for these while we're waiting for this new, for today's script to open. Right, let us just quickly, oh yeah, all right, there we go. My sincere apologies, guys. This is so unprofessional of me, but I promise I will make it up to you. If you forgive me, can I see some fire emojis? If you do forgive me, can I see some fire emojis? Can I see some fire emojis? Can I see some fire emojis? Fire emojis in the comments, in the comment section. All right. Okay, let's wait for that to load. I'm gonna blame it on load shedding, guys, since in South Africa that's all, you know, we can blame it on everything. We blame everything on on there we go. We blame everything on load shedding. All right, so yes, guys, again, apologies for that. Let's just quickly get to the business of the day. So as I said, today we're going to be discussing understanding the golden trading steps. All right, the golden trading steps. So today we're going to be talking about understanding candlestick patterns, or what kind of candlesticks to look out for, and then we're going to be talking about understanding key levels, double zeros and triple zeros. I'm excited about that. And we're going to be talking about using the key levels with candlestick patterns and how to set your take profit and your stop losses. And we're going to do practicals where we get into into the chart and plot out those key levels, look at those candlestick patterns, see if there is any any opportunities that we can take right now. If not, then I will give you guys trade ideas that you can wait for price to get to a certain level, and then you can execute those trade solely at your own discretion. Okay, are we together? Let us go. Understanding candlestick patterns. All right, understanding candlestick patterns. Japanese candlesticks are used to describe price action during the given time frame. All right, Japanese candlestick can be used for any time frame, whether it be 1 day, 1 hour, 30 minutes, whatever you want. All right, so types of candlestick that we're going to be discussing today is we're going to be talking about the single candlestick patterns, we're going to talk about dual candlestick patterns, and we're going to talk about triple candlestick patterns. Are we together? So I'm going to give you guys examples of these candlestick patterns, that some are used as a continuation, some are used as reversals, and I'm also going to give you key levels where you can look out for those candlestick patterns so you know what to do to get to the next step of your trading, which is executing. All right, so let's talk about single candlestick patterns. When these types of candlestick patterns appear on a chart, they can signal a potential market reversal. All right, when this type of single candlestick patterns appear on the chart, they signal a potential reversal. So whenever you see this type of candlesticks that we're going to discuss, they will signal a reversal. But it's also important to note that it's not all the time that you see a candlestick pattern that there will be a reversal. Are we together? Are you with me? All right, so today we'll be discussing only 4 basic single candlestick patterns. We're going to be talking about the hammer, the hanging man, we're going to talk about the inverted hammer, and the shooting star. All right, so as you can see on the picture there, we have an example of what a hammer and a hanging man is. All right, so the hammer is a bullish reversal pattern that forms during a downtrend. So the one that you see on the left hand side there, it's a hammer. This one here, it occurs in a downtrend. All right, it is usually formed in a downtrend. It's a reversal candlestick. All right, it is named because the market is hammering out at the bottom. So when the price is falling, hammer signals that the bottom is near and the price will start rising again. So whenever we see this type of a candlestick, either at our key level, at our support area, after in a downtrend, then we know that there is a possibility, or there is a potential of a reversal, and the market will start going bullish. Okay, the long lower shadow indicates that sellers pushed price lower, but buyers were able to overcome the selling pressure and close near the open. As you can see here, we have a very small body, and then we have a long wick, or a long tail, or a shadow, which just basically signifies that price opened there and it went all the way down to this price, but the buyers pushed the price back up to that area there, and it signals that the buyers are gaining momentum. And most of the time, in most cases, when we see such a candlestick at a key level, there is a possibility of a reversal or change of trend. All right, so just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it's safe to pull that trigger. All right, a typical example of a confirmation would be to wait for a white candlestick to form or to close above the open of the right side of the hammer. All right, so as you can see in this case there, you'll have a hammer forming, and the following candlestick will be a bullish candlestick that forms and closes above the open of the previous hammer. All right, so these are the things that you need to look out for when it comes to the hammer. Love from India, bro. Cheers, man. Thank you, bro. Thank you. Where in India are you from? Say, where in India are you from? Shout out. All right, so the recognition criteria for a hammer, you need to look out for these 4 things to confirm that it is a hammer. All right, the long shadow, the wick, or the tail is about 2 or 3 times the real body. So if you look here, the size of this shadow is about 2 to 3 times the size of the body. All right, and at the top there is little or no upper shadow. So in a hammer, you'll notice that most of the time there is just a small wick, or there is no tail at all. All right, the real body is at the upper end of the trading range. All right, and the color of the real body is not that important. The color of this may be black, it may be white, it may be bullish, it may be bearish. It really does not matter in this instance, but what matters is where this happens. All right, and now let us move on to the hanging man. The hanging man is a bearish reversal pattern that can also mark a top or a strong resistance level. All right, so a hanging man like that. All right, when price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber the buyers. You see that the long lower shadow shows that sellers pushed price lower during the session. Buyers were able to push the price back up, but only near the open. This should set off alarm, since this tells us that there are no buyers left to provide the necessary momentum to keep the price going up or raising the price. All right, so just like the hammer, the hanging man also signals that the buyers are it signals that the buyers are getting exhausted and the sellers are now taking over. And the criteria for a hanging man is the long or the lower shadow is about 2 or 3 times the size of the body. All right, same here, you can see the shadow is about 2 or 3 times the size of that body. There is little or no upper shadow, so usually at the top you'll have just a small tail, or there is no tail at all. And the real body is at the upper end of the trading range. The body is at the upper end of the trading range, and the color of the body is not as important, although a black body is more bearish than a white body. Does that make sense? If it makes sense, can I see fire emojis if you guys understand the hanging man and the hammer? Can I see some fire emojis? Can I see fire emojis? Can I see fire emojis? All right, now let's move on to the inverted hammer and the shooting star. Let's move on to the inverted hammer and the shooting star. All right, the inverted hammer and the shooting star also look identical. The only difference between them is whether you are in a downtrend or an uptrend. An inverted hammer is a bullish reversal candlestick. All right. A shooting star is a bearish reversal candlestick. So an inverted hammer is a bullish reversal candlestick, and this one is a bearish, bearish. Apologize. I do apologize on that. All right, so are we together? Can I see some fire emojis? Can I see some fire emojis in the comment section? Can I see some fire emojis? All right, so just like the hammer, all right, the inverted hammer occurs when the price has been falling. Falling suggests that the possibility of a reversal. All right, it's a long upper shadow that shows that buyers try to bid the higher price. So the other one, the shadow was at the bottom. So now we see that the shadow is at the top. But this is also, all right, and this is also a reversal pattern. All right. So on the shooting star is also the opposite. So we see a higher or a longer shadow on the upside instead of inside the trend. So it means now the buyers pushed price up, but the sellers came in and pushed the price down to signify that the sellers are gaining momentum and the buyers are losing momentum. Does that make sense? Does it make sense? I'm sure you guys have seen many of these candlestick patterns, single candlestick patterns, and we're gonna get to them as time goes by. All right, now let's get to the dual candlestick patterns. All right, so when this type of candlestick appears on a chart, they signal a potential market reversal. So even dual, oh, my apologies on that. So even dual candlestick patterns, they represent a reversal. So there are two candlestick patterns that we're going to talk about, or dual candlestick patterns that we're going to talk about, is the engulfing candles and the tweezer bottoms and the tops. So we have a bearish and a bullish engulfing, and we have tweezer bottoms and tweezer tops. All right, now let's go to the engulfings. All right, now we have a bullish engulfing and a bearish engulfing candlesticks. All right, there are two types of engulfing candles. All right, the bullish engulfing is a two candlestick reversal pattern, right, that signals a strong up move may occur. All right, it's a candlestick that shows us that there might be a move to the upside. All right, as you can see, the example of an engulfing, of a bullish engulfing, we have a bearish candle and we have a bullish candle that is bigger than the bearish candlestick. All right, now on the other hand, the bearish engulfing pattern is the opposite. We see it in an uptrend, we will have a smaller bullish candlestick and a bigger bearish candlestick that engulfs the the bearish candlestick. Are we together? All right, so basically this is what it means. We have sellers coming all the way down, and then we have buyers pushing in. When we see buyers pushing in, what is the confirmation that the buyers are stronger than the sellers? We see it by the previous candlestick, all right, which some may refer to as the order block, is slightly smaller. All right, it's closed either below the halfway of the bullish candlestick, so it's engulfed by the bullish candlestick. So it shows us that the buyers are coming in. All right, and with the bearish candlestick, same thing. We'll have a smaller bullish candlestick and a bearish candlestick that engulfs or overpowers the sorry about that, guys, not feeling so well, that engulfs the that engulfs the bullish candlestick. Are we together? Now let us move on to the tweezer bottoms and the tops. Now If you look at these candlesticks, if you guys know what a tweezer is, you will notice that this candlestick kind of look like tweezers, which is the reason why they are called tweezers. All right, so we have tweezer bottoms and we have tweezer tops. These are reversal candlesticks as well. We have tweezer bottoms, which are a bullish reversal pattern, so they occur in a downtrend, and once we see them, we know we are now going into an uptrend. And tweezer tops occur in an uptrend, and we see them, we know there is a potential of a downtrend or a reversal. All right, so now the most effective tweezers have the following characteristics. You can write this down. The first candlestick is the same as the overall trend. So as we see here, the first candlestick is a bearish candlestick, so it's the same as the overall trend. All right, are we together? All right, if the price is moving up, then the first candlestick should be a bullish. If the price is moving down, then the first candlestick should be a bearish. The second candlestick is opposite of the overall trend. All right, if the price is moving up, then the second candlestick should be bearish. So the same thing that we see here, price was moving down, we had the first candlestick as a bearish and the second candlestick as a bullish. These are the characteristics of tweezers. All right, the shadows of the candlestick should be equal or near equal length. So the shadows or the tails or the wicks should be equal. All right, they should be equal. Same thing as that side, we will have this candlestick as a bullish and the second one will be a bearish, and the wicks are equal or near equal. Are we together? Are we together? Can you guys understand the dual candlestick patterns? Can you guys understand those? Let us now move to the triple candlestick pattern. The triple candlestick patterns, you know, some of them are reversal patterns and others are continuation patterns, which signal a pause and then a continuation of a current trend. All right, so unlike the single and the dual candlestick patterns, those are reversals. The triple candlestick patterns can be either a reversal or they can be a continuation. All right, so we're gonna talk about the popular triple Japanese candlestick patterns, which are the evening and the morning star. We're gonna talk about the three white soldiers and the black crows, and then we're gonna talk about the three inside up and the three inside down, and then we're gonna go right straight into the charts. Are you guys ready? Are you guys ready for the charts? Are you guys ready for the charts? Are you guys ready? Are you guys ready? Are you guys ready? Can I see some fire emojis? Can I see some fire emojis if you guys are ready? If you guys are ready for the charts. If you guys are ready for the charts, let me see some fire emojis. All right. So the morning star and the evening star. The morning star and the evening star are triple candlestick patterns that you can usually find at the end of a trend. They are reversal patterns that can be recognized through three characteristics. Write this down. Three characteristics of the evening star and the morning star. All right, we'll use this evening star on the right hand side. All right, to give an example, the first candlestick is a bullish candlestick, which is part of the recent uptrend. So in an evening star, the first candlestick will take the shape of the direction of the current trend. The second candlestick has a small body, indicating that there could be some indecision in the market. This candle can be either a bullish or a bearish. Then we will have a small candlestick in the middle there. All right, and then the third candlestick acts as a confirmation that the reversal is in place as the candle closes beyond the midpoint of the first candle. All right, so we'll have the first candle taking the direction of the it's taking the direction of the trend, and we will have an indecision candlestick right there in the middle, and then we'll have the second candlestick closing below the midpoint of the first candlestick. It doesn't have to close below the open, but it has to close below the midpoint of the first candlestick. As we see, even here we had a bearish candlestick, we had an indecision, and we had this candlestick closing above, you know, the midpoint of the first candlestick. I hope that makes sense. Let's talk the 3 white soldiers and the 3 black crows. All right, 3 white soldiers and the 3 black crows. The 3 white soldiers pattern is formed when 3 long bullish candlesticks follow a downtrend. All right, signaling that a reversal has occurred. This type of triple candlestick pattern is considered as one of the most potent in your face bullish signals, especially when it occurs after an extended downtrend and a short period of consolidation. This just tells you right in your face that look, there is more buyers than sellers now. We have 3 candlesticks that are just strictly shooting up. All right, so that's what the three white soldiers are. All right, now the first of the 3 soldiers is called the reversal candle. It either ends the downtrend or implies that the period of consolidation that followed the downtrend is over. All right, for the 3 white soldier patterns to be considered valid, the second candlestick should be bigger than the previous candle's body. All right, as we can see here, this candlestick is bigger than that one. All right, for the 3 white soldier patterns to be completed, the last candlestick should be at least the same size as the second candlestick and have a small or no shadow at all. Now, for this pattern to be considered valid or to be considered a 3 white soldiers, the first candlestick should be a bullish candlestick. Now, the second one should be bigger than the first one. The third one should be the same size as the second one or bigger and has no shadow or maybe just a small shadow. Then we know that our 3 white soldiers pattern is complete. Now let us move to the 3 black crows, which is basically the opposite of the 3 white soldiers. It is formed when 3 bearish candlesticks follow a strong uptrend, indicating that the reversal is in the works. The second candlestick will be bigger than the first one in terms of the body, and the third one will be the same size as the second one, or it will be slightly bigger and have a small or no shadow. Are we together? Do you guys understand the 3 white soldiers and the 3 black crows? Now let us quickly go to the 3 inside up and the 3 inside down. All right, now the 3 inside down or the 3 inside up candlestick formation is a trend reversal pattern that is found at the bottom of a downtrend. This triple candlestick pattern indicates that the downtrend is possibly over and that a new trend has started. For a valid 3 inside up candlestick formation, look for this following properties. All right, now take out your notes and start writing down again. All right, the first candle should be found at the bottom of a downtrend and is characterized by a long bearish candlestick. So if we are looking for a 3 inside up, the first candle has a long bearish candlestick. All right, the second candle should at least make it up all the way to the midpoint of the first candlestick or slightly above. All right, so the second candlestick should not be a bearish, it should be a bullish. It should go above the midpoint of the previous bearish candlestick. All right, should close slightly above or at the midpoint. All right, the third candlestick needs to close above the first candle's high to confirm that buyers have overpowered the strength of a downtrend. As we can see, the open of this candlestick was slightly there, but the high of that candlestick was there. So the third candlestick needs to close above the high of the bearish candlestick to confirm that the buyers have taken over. All right, do you guys see that? Do you guys see that? Can I get some fire emojis in the comment section? Can I get some fire emojis? Can I get some fire emojis? All right, now the opposite of the 3 inside up is the 3 inside down, which now happens in a up trend. All right, the 3 inside down candles formation is found at the top of an uptrend. It means that the uptrend is possibly over and that a new downtrend has started. Now the 3 inside down candlestick pattern needs to have the following characteristics, same thing as the 3 inside up. The first candle should be found at the top of an uptrend and is characterized by a long bullish candlestick. As we can see, we have a long bullish candlestick confirmed. Right, the second candle should make up all the way down to the midpoint of the first candle, or should be slightly below. As we can see, that is at the midpoint of the second candlestick. All right, and the third candlestick needs to close below the first candle's low to confirm that sellers have overpowered the strength of an uptrend. As we can see, that is the low of the first candlestick, and the third candlestick has closed below that low, and that confirms that we have a 3 inside up. So that's it, guys, from me in terms of the single candlestick pattern, the dual candlestick pattern, and the triple candlestick pattern. Do you guys understand? So now we're quickly going to go to the charts. All right. Oh no, I opened the wrong chart. Now let us go to the charts. All right, let us go to the charts, and then let's try and identify some single candlestick patterns, and let's try and identify double candlestick patterns, and let's try and identify triple candlestick patterns. Are we together? Now, at the top of my head, let's see. I'm just trying to see. Let's just quickly go on a 1 hour. All right, let's go on a 4 hours so we can have a bigger chart there. All right. Who can tell me what this is? Who can tell me what this is? What does this look like? Can someone in the comment section tell me what this looks like? This pattern there. All right, we've identified one. Can someone tell me in the comment section what that looks like? All right, let's try see if we can find another one. Insert, let's go object, shape, rectangle. You can look at that as well. All right, trying to see if there's other ones that I can pinpoint. All right, here's one. Can you guys tell me in the comment section what exactly you are seeing? All right, there's one. All right, you guys see that? Let's see if we can identify more. See if we can identify more. Let's see if we can identify more. Okay, there's one that I see. You see how easy it is once you familiarize yourself with these. It's easier for you to just spot them, and you see that immediately when that happens, there is a reversal. You know, there is a reversal there. All right, let's look at, there's a triple. There's a triple. All right, can you guys let me know what you guys are seeing? Can you guys let me know what you guys are seeing? We have another engulfing there. All right, shape, rectangle. We have another engulfing there. All right, there's another engulfing, bearish engulfing. And you see what happens immediately after that. I'm looking for a what do you call? There we go. We have a 3 inside R. We have, let's look at that. we have that. I'm trying to find 3 black crows, and there we go, 3 black crows. Do you guys see that? Do you guys see how easy it is to spot these things? So you can see, for instance, immediately after this 3 black crows, we have just a retest of that order block there, and then the market went all the way down, and then we had the three white soldiers, and then the market went all the way up. We had an engulfing there, and the market went all the way down. All right, and then we had another engulfing there, the market went all the way down. Right, we have an engulfing there, the market shot all the way up. All right, so do you guys see that? Do you guys see that? Can I see some fire emojis? Can I see some fire emojis? Fire emojis, fire emojis, fire emojis, fire emojis. All right, so you guys are now able to identify the candlestick patterns. Let's quickly go to understanding key levels and how we can incorporate the two to get our trading edge. I'll try to be as quick as possible because we only have a few minutes left, and then we'll go there. All right, so now we're gonna be talking about key levels, what I refer to as the what you call as the round numbers. All right, I refer to as the round numbers, the 000 and the 000. All right, are we together? Are we together? Give me 1 second. Oh, yeah. Can I see those fire emojis, guys? Can I see those fire emojis? You guys are engaging with me today, so I don't know if I should bring out that fire signal or I should just let it slide. Yeah? Should I just let it slide and not bring out those fire signals? What are you guys saying? Is you guys telling me that I shouldn't engage with me? There's only 2 people engaging today. Only 2 people engaging today. All right. So let us engage. Let's make sure that we engage. Right. Right, all right. So now we're gonna be talking round numbers. As I said, we're gonna talk about why do round numbers work, and round numbers as support and resistance, and how to use the round numbers. All right. My server just says fire. I don't want you to say fire. I want you to put the fire emojis. I want you to put the fire emojis. Sorry about that. I'm just opening up a document real quick, and then we'll move to it. All right. Are we together? Sorry guys, my apologies on that. There we go. Where am I? Okay, round numbers. So these are levels of a particular interest because especially the biggest traders tend to place their orders near these numbers. All right, double zeros and triple zeros, and I have two examples of I have examples of double zeros and I have examples of triple zeros. All right, some traders will also look at the midpoint between the round numbers known as 50s. No, so now the double zeros, for instance, if you look at Nasdaq 100, your double zeros will be like prices like 11,200, 11,100, 11,400, 11,500, and so forth. And if you're looking at the Dow Jones, will have prices like 34,700, 34,600, 34,500, 34,500, and so forth. It's just basically your hundreds. All right, and then on pairs like Euro USD will have like a 1.1400, and then in Euro on USD JPY will have numbers like 104.00. so you're basically looking for two numbers or double zeros, two zeros, double zeros. All right, at the end of that price. And then for triple zeros, we're looking at something like 12,000, 13,000, 11,000, 14,000. And on the Dow Jones, it would be like 33,000, 34,000, 35,000, 29,000, and so forth. And Euro USD, it would be like 1.2 thousand, 1.1 thousand, 1.3 thousand, and so forth. So these are your thousands and your hundreds. These numbers are so significant in trading because it's a psychological number. They are referred to as a psychological number in a sense of human beings like to round off numbers. Are we together? Human beings like to round off numbers. So now what happens is, think about it yourself. If you were to see something that is selling for 99 rand or 97 rands, you would basically say this thing is $100 because you are rounding off to the nearest 100. This also happens in the Forex market, that big players in the game or the biggest traders will tend to take orders at this price because they are looking more at price. Are we together? They are looking more at price. Now, why do round numbers work? Okay, we'll get to that now. Before as to why they work, let us go into the chart so I can plot them for you so you can see exactly what these round numbers are. All right. Are we together? All right, so we're gonna use the same chart that we used. All right, we're gonna use the same chart that we used before. So we are now on Dow Jones and current price is 35,268. So we will put a round number there and we will say 35,200, right? And we will go 35,300. Let's give me 1 second. 35,300. All right, and we will go 35,400. 35,400. All right, and we will go. Yeah, man. We will go 35,500. 35,500. So this is basically how you spot your round numbers. Are we together? Now look at that. Look at exactly where I placed my lines. What happens? We had a reversal pattern there, right on the round number. Look at that. The market reversed exactly that. The market reversed exactly there. Look at all of that. The market rejected there. Do you see wherever I've placed my numbers, there is a significant move in the market just by placing the number without even looking at the turning points, without even looking at the support and resistance, which is why I said this can also be used. Let's do 35,000. All right. This can also be used as, and then we'll do 35,100. This can also be used as your support and resistance. Are we together? And you can use them as your sniper entries. Can you guys see what we're trying to do here? Can you guys see? Can you guys see? Can you guys see? Can I see some fire emojis if you guys understand what is going on here? What is going on here? So this is basically how you plot out your key levels. All right, now why do they work? Why do now round numbers work? RB numbers are also known as psychological levels because of something psychologists call the round number bias. Think about it. How many times do you see something selling for 97 bucks and you say it's 100 rands? Here are some of the concepts that can help you understand RB numbers, all right? That can help you understand the concept of RB numbers. One is price will tend to move, all right? Price will tend to reverse near RB numbers, as I've shown you. Price will tend to reverse near RB numbers. It can be tens, it can be 50s, it can be hundreds, it can be thousands, but the most common ones are the 100 and the thousands, all right? But also note, not every RB number will cause a reversal. And number 3 is price swings generally run 3 to 4 RB numbers in a trend, all right, before a correction, and price will generally go up to 1 to 2 RB numbers in a correction. All right, so these are some of the concepts. So the markets will run 3-4 RB numbers in a trend, and then it will correct with at least 1 to 2 RB numbers. Does that make sense? Doesn't make sense? If it makes sense, can I please get some fire emojis? All right, so round numbers as support and resistance, so bringing RB numbers back to familiar technical analysis territory. They can really be thought of and used as another form of support and resistance. When price falls to a round number, it can act as a support. When price rallies up to a round number, it can act as a resistance. All right, now traders can use RB numbers alongside other types of support and resistance formed by previous highs and lows, Fibonacci retracement tools, or trend lines to find the confluence of support and resistance at a price level. Are we together? We're together. Now we're gonna go to how to use round numbers. Now this is gold, guys. Take out your notes and start writing. Take out your notes and start writing. Take out your notes and start writing. Are we together? Take out your notes and start writing. All right. Step number 1, when using RB numbers, you need to understand what is the direction of the trend. All right. You can either use the smart money concept or the price action or your whatever preferred method, technical analysis to determine the trend. Only trade with the trend and never against it. All right. Only trade with the trend and never against the trend. All right. Number 2, wait for price to swing in the direction of the trend. All right, so if you have identified that your trend is an uptrend, you wait for price to swing in that direction. Now once price swing in the direction, you wait for a correction to begin after a high in an uptrend or a low in a downtrend near an RB number. So if we are in an uptrend and then we get to a certain price and the market start correcting from there, then you know you need to start looking for your entries. All right, so whatever you call pullbacks or retracements or whatever you call them, all right, and step number 4 is you take your entries at the retest of your RB number in the direction of your trend. Now if the market is in an uptrend and there's a correction that forms a mini downtrend, you are looking for where the market is going to go next to an RB number. Remember I said it usually goes 1 to 2 RB numbers, so it can go up to 1 to 2 of 100 to 300 100 to 200 points, and then you can take your entry there. And where do you set your stop loss? You set your stop loss at the next round number or at a 50 level. So if you are entering at 12,100, you can put your stop loss maybe at 12,050, or you can put it at 12,000, or just to give the market room to play around. And your take profit, remember as we said, the market usually runs about 200 to 300 pips from the right after a correction or in the swing of the trend. So you will set your take profit at least at a second or the third RB number. All right, so that will be like a 1:3 risk ratio. All right, so now we're gonna go to identify candlestick patterns with key levels. All right, hey, almost gave you the juice. Almost gave you the juice. All right, of which we've already done, because we've already identified our key levels. We've already identified our we've already identified our candlestick patterns. Now let's go to a smaller time frame. Let's see if we can get an entry. Let us go to let's start maybe at a 30 minutes and see we are in an up. So the market has been consolidating, but we see here there is a bit of an uptrend. All right, the market has been consolidating between these two prices, so we need to wait for a market to break out of this. Let's check maybe NAS 100. Let's go to NAS 100. Let's see. Okay, the market is in a downtrend, as we can see. The market is in a downtrend, as you can see, with the trend over there. All right, market is in a downtrend. All right, now let us identify our key prices. We'll start at that low. We'll start at 15,000. 15,000. All right, you see exactly what happened at 15,000. Now let's go to 15,100. 15,100. I sound like someone that's in an auction. I sound like someone that's having a problem to withdraw. Please contact support, and they will assist you with your withdrawals. See what happened there. Or 100. Let's go to 200. Let's go to 200. Let's go to 200. 15,200. Let's go to 300. So now I'm identifying my key levels on NASDAQ, and then we're gonna look for the candlestick. Please speak to support and they will assist you. Please contact the OctaFX support and they will assist you with any issues that you are having. All right, 15,400. All right, so you guys see how to spot parameters. 15, no, not 11, 15. Then we're gonna go in a smaller time frame, see what type of trend we have there. 15, 500. All right, so I'm sure by now it makes sense. All right, let's go on a 30 minutes. Let's see what trend we are in. All right, we are still okay. Let's look at that. So here, let me just, as we can see there, we have a reversal. As we said, rectangle, style, description, there, fill, there we go. All right, so now we did say let's look at that candlestick over there, single candlestick pattern. All right, signaling a what? A reversal. Number two, we have this reversal pattern there, which it's an engulfing, again happened at the 15,000 price, signaling what? A reversal. All right, and also we have another confirmation there of an engulfing, signaling a reversal. So it means we're in a downtrend, so there's a possibility of an uptrend. So we also have the three soldiers there. All right, the three white soldiers, as you guys can see. So it means on NASDAQ there is a big potential for buy entries. Now, where would our entry be? I would say let's put our entry at 15,100. All right, so there we'll set a buy limit at 15,100. All right, and our TP will be at 1.2. Let's put our TP at 15,300. All right, but also another thing to pay attention to, that I just noticed now, there is a possibility of a double top forming over there, but I don't think it will hold based on these three reversal patterns that have confirmed that have confirmed a buy on Nasdaq. So as I said, you want to catch those entries near your your what do you call your round number. So our next round number here will be 15,100. So I'd set a buy limit at 15,100. If you're not in the Telegram channel, please make sure that you're in the Telegram channel, and then we can monitor this trade together. All right, so let's set our buy limits at 15,100. We're anticipating that the market will reject this price there and go all the way up to 15,100 before we have another correction. All right, so we can then now set our stop loss at 15. This is where we can set our stop loss at 15,5050 is where we can set our stop loss. All right, so we can set our stop losses there. So it means our risk to reward ratio is 1:1:6. Right, so if you are using a standard lot, your stop loss will probably be let's do that. The stop loss is at 15,050 and your take profits will be at 15,300. Right, so if we lose this trade, we're losing about $500. But if we gain, if we hit our take profit, we're looking at around $2,000. See, that's more like it. Hi bro, I'm now your new friend. Absolutely. Kishan, let's chat. Do you guys have any questions? As we can see, the market is broken out of that trend as well. All right, broke in, came back inside and went back outside again, so it is quite rejected now, but let us wait for it to come and get at this level. However, if you also want to take a high risk entry, you can take an entry right at what you call 15,150. You can actually take a trade now. Let's just but this is a more high risk entry. But if you're looking for a sniper entry, we can then look at that price there. All right, bro, can I get your attention? Yes sir, you have my undivided attention. So as I said, we can take a trade now because the market is sitting at a 150, which is a psychological number. We can take a trade now, but that is a more high risk. If we're looking for a more low risk entry, we can look at 15,100, and if the market goes up and breaks 15,200, we can wait for a pullback and a retest on that 15,200, and then we can take a trade from there as well. All right, that's it from me, guys. I love you, bro. I love you too, Kishan. I love you too, brother. I love you. Do you guys have any questions? This is how you get sniper entries. So I'm now gonna go into the questions. Do you guys have any questions? All right, do you guys have any questions? Do you guys have any questions regarding to the sniper entries? Sniper entries only. All right, so let me know if you have questions in the comment section. We have about 5 minutes before we close. Yeah, today I would say let's take a buy on NAS 100, and then we can put our stop loss there. You can put your buy limits at 15,100, and we'll put our stop loss that's 15,050. We can put our take profit at 15,300. If you want, you can also put your take profit at 15,200. That's good money. That is very good money. You could probably, on a standard lot, you could look at least $1,000. On a 0.10, you could be looking at $100 take profit, and on a 0.01, you could be looking at $10. You could be looking at $10. All right. All right, all right, all right, all right. So do you guys understand? Did you guys understand? Did you guys understand? Please make sure that you get tuned in next week. Please make sure that you get tuned in next week, because next week we're taking it up a notch. We're taking it a level higher. If you think this is juice, wait for next week. All right, and then I'm gonna give you guys the juice, the more interesting key levels of what you can look forward to, the more deeper secrets of this strategy, and what else to look out for when you are trading using this strategy, so we can get those sniper entries with little to no drawdown. All right, are we together? So yes, that's it from me, guys, for today. All right. And as I've promised you guys, that at the end of this session, I'm going to give you guys a promo code that you can use to double up your deposit. The promo code that you can use is Isaac Edu, Isaac EDU. Isaac EDU. All right, use that to get your 100% bonus as you're depositing with OctaFX. So if you're depositing $1,000, you will get an extra $1,000. All right, and also, by the way, with OctaFX bonuses, they are withdrawable, but there are terms and conditions. You can read about that on the OctaFX bonus section. They can give you all the terms and conditions of what you need to do and how many volumes you need to trade in order for you to withdraw your bonuses. All right, so I am happy, Randall, that you learned a lot. All right. Kishen, bro, good night in India. It's about midnight, so meet you tomorrow. Cheers, bro. I will be tomorrow again. We will be hosting a live trading session on Telegram. Please go on my Instagram, get the link, or go on to OctaFX website and go to the trading marathon, OctaFX trading marathon, and get all the information there. All you need to do is fund your account with a minimum of $100, and then we're gonna have a competition as well, up to $1,000 in prizes to be won. There's gonna be one person that wins 1,000, another one is gonna win, I think it's about 500 or 300, another, I can't even remember. There's just so much money to win. Another person is gonna win 200. There's gonna be 7 people that are gonna be chosen that will also win cash prizes of $100 deposited right in your account. Man, I can't wait for tomorrow, and I'll be sharing the stage with a great expert from Nigeria, Ambrose and Happiness. So please make sure that you tune in tomorrow, not next week, tomorrow up until Thursday. So starting tomorrow up until Thursday. All right, starting tomorrow up until Thursday, from the 15th up until the 17th, we'll have a trading marathon. We'll have live trading sessions like this one, and next week, Monday, 7 p.m. Central African time, we're gonna have another live trading session. As I told you, we're gonna be taking this up a notch. So make sure that I see you tomorrow, make sure that I see you on Wednesday, make sure that I see you on Thursday, and make sure that I see you on Monday. That's it from me, guys. If you have any questions, there is a link in the comment section. Put your questions in there, and then I will answer some of your questions in the next session. All right. I do hope and enjoy that you guys I hope you guys enjoyed and you learned a lot from today's webinar. I hope I didn't waste your time. It was really an amazing opportunity. All thanks to OctaFX for giving me this opportunity to share with you guys, and I cannot wait to see you tomorrow, see you Wednesday, see you Thursday, and see you Monday, so we can share more of the knowledge that we have. From me, guys, that's it. I am out. Hope you guys have a blessed evening, and God bless you. I love you guys so much. I will see you at our next episode. That's it from me. Cheers. Have a good one.